exclusive chat with CNBC TV 18's Udayan Mukherjee. Here's an excerpt of that conversation. Listen in.
I would actually argue that even FIIs have not given up their positioning, because what you see in terms of FII outflows is actually a fraction of what emerging markets have witnessed. I mean, let's not forget, India operates in the context of the EM world. The EM world has seen over $50 billion of outflow in 2015. India has actually seen net inflows, albeit outflows in the second half, but on the aggregate for the whole year, it's been net inflows. So India has actually, I don't think, even seen that type of capitulation from FIIs. In fact, the data that we track tends to suggest that, if anything, FIIs are still overweight India. Anecdotally, when I ask fund managers, they tell me that India is amongst their favorite market, if not their favorite market. So I would actually argue that even FIIs have not really changed their positioning a lot. Yes, it's come off a tad from the highs.
Is that a good thing or a bad thing in your eyes?
No, that's actually, I think, the challenge for the Indian markets, you know. And I was actually going to step into that point, which is that India has lost its beta relative to emerging markets over the past few years. That beta has been steadily declining since 2008. And India is getting isolated in an EM world, which is people are looking at India as a different market, which is it's not in the EM basket. And to that extent, that is always a danger, because it means that if there is a, if there's a 2008 style fall in markets around the world, then India will obviously hurt a lot more because of its rich positioning. It will also hurt India if emerging markets rally. Not our base case scenario, because we think that fundamentally the EM basket is a lot more challenged than the DM basket. But if the EM basket were to rally for some reason, India will underperform. Now, for the investor sitting here inside India, that may not be a matter of concern, because actually what he will see is that the Nifty and the Sensex rise in absolute terms while India underperforms, and it will be a better situation than, say, the second half of 2015, where India actually delivered stellar outperformance but fell in absolute terms. So India's low beta characteristic works well if returns in the world are modest, as we are expecting right now. But if the returns turn more bullish, then India will underperform.
What are the Sensex levels or Nifty levels for your bear and bull case scenario for 2016?
So our base case is about 28,000. The bull case, I think, is around 34, and the bear case is around 22. And if I weight this by probabilities that we anticipate for each of these scenarios, we get a year-end target of 30,200. So that's the Sensex levels that we're looking at for 2016. So we're looking probably at a 10% or downside from here if things turn really bad. And of course, conversely, we are looking at a substantial upside if things turn around better. Overall, the absolute return may not seem very attractive, but the context here is that we're expecting mostly single-digit returns for equity markets around the world.
If you had to bet on either consumption or capex as a theme for 2016, what would you lean towards in India?
So I think the two things that dragged the economy down in 2015 were rural consumption and private capex. Arguably, government capex has done quite okay, and urban consumption has shown measurable signs of recovery, especially in the second half. So I think the question, if I were to further narrow it down, would be whether I would bet on rural consumption versus private capex. And I think I would go for the former. I think rural consumption, in my view, is bottoming out, albeit keep in mind that we should not get another bad monsoon. The early weather forecast from sources outside India suggests that we may be entering into a La Nina after one of the most, or rather I should say the most severe El Nino that the world has witnessed since the 70s. And if it is a La Nina, it means India will get bountiful rainfall, and that will actually help. But even without that, assuming that we get a modest monsoon, I think rural consumption may have seen its worst.
All right, you can